To keep yourself updated, subscribe to Indigo Learn and click the bell icon.
Welcome guys, and today our topic of discussion is income from house property. Now when you talk about this head of income, a very simple and easy one, let me take an example first to understand what is property, what is real estate. Now my friend Harish, he has a lot of properties. He has a factory building, he has a commercial complex, he has a residential complex, that is apartments, he has a villa, he has agricultural land, and let us say he has many real estate projects. Now he by profession is a chartered accountant, but he also has a real estate business. Having said, he's invested so much into real estate for what? Obviously for the passive income that real estate gets us. Now what exactly is passive income? Now remember, income is of two kinds. One is active income, where we actively need to work for it. For example, if I am a chartered accountant, then the consultancy that I give will give me some return. Whereas real estate, you don't have to really do anything after purchasing it. All you have to do is lease it out, and then we get a lot of rent from all these sources. Now, the question here is the rent that we receive from all these sources. So, my friend Harish gets a lot of rent, be it from the factory, be it from the commercial complex, be it from the apartments, be it from the villa, be it from his agricultural land or anywhere else. Now, today I am here to discuss what exactly is the taxation of all this rent. And sometimes, like I told you, he also has a lot of real estate ventures wherein, remember, the intent of my friend Harish was or must be is to sell all the flats or all the villas, but there is a possibility that some of the flats or the villas or the area remains unsold. Is that a possibility? Of course that is a possibility. Now whatever is the so-called unsold part of the project, what is the tax treatment of that? We are here to discuss all of this. Now before we go to any of this, first thing we must understand is the charging section. I told you charging section is like the receptionist of any organization. Now what does the charging section, what is the charging section of this head of income, that is income from house property? The charging section is section 22. Now there are a few terms that I will introduce you to, which will enable both of us to understand what exactly falls into the scope of this head. So the first thing that the charging section tells us is that the annual value of any building or land appurtenant thereto shall be taxable or includable in the hands of the owner. So there are three terms here. Of course, this is not exactly what the charging section tells us, but the essence is the same. There are three terms that I need you to understand. One, what is this annual value? Two, what is this buildings and land appurtenant thereto? And third, what is this owner? Now let's get back to our example, my friend Harish. Now Harish, let us say, has got these properties through different means. Some of them are self-acquired. Some of them are self-acquired. What is self-acquired property? Property that has been purchased by Mr. Harish is called self-acquired property for him. Some of them might be inherited. He could have got it from his parents, his grandparents, whatnot. Some of them must have been gifted to him. So property can be acquired through different means. The law, section 22 as such, tells us that the annual value of any buildings and land appurtenant thereto shall be includable under this head only if for that particular property the person is the owner. Are we understanding? The annual value will be includable in the hands of the owner only. What do I mean to say? Let us just for a second assume that the residential apartment by Harish is leased by him, in the sense it is taken by him on a long-term lease from somebody else, and he in turn leases out to somebody else. So what is Harish doing here? Harish is as such taking the property on lease, and the same property he is leasing it out to somebody else. So let us say Harish is paying a rent of 20,000, whereas he is receiving a rent of 50,000. Is this beneficial? Of course, he is getting a rent of 50,000, whereas he is only giving a rent of 20,000 per month. That means the net that is left with Mr. Harish is 30,000. Now what I want to know, this property, the annual value, will you include it in the hands of Harish? The answer is no. Why? Because Harish here is not the owner. Harish himself is a tenant. Harish himself is a tenant. Therefore, can I say that any sublease will not be included under this head? Are we understanding? But tell me one thing, what about the owner? The owner who is actually renting it out to Harish and getting a rent. Will the owner be subject to this head? Will the annual value of the property be included in the hands of the owner? The answer is yes. So it's very important first of all to identify whether or not the SSE is the owner of the building and land appurtenant thereto. Having said this, I told you three terms. One, of course, what is the annual value? We'll come to that. Second, the annual value of any building and land appurtenant thereto. Remember, only the income from house property will be included under this head, and house property, as we understand, is any building and land appurtenant thereto. Now, think about it. What do you mean by building and land appurtenant thereto? Appurtenant is nearby. So, we've taken a lot of examples for Harish. We said he could have a factory building. Is a factory building also house property? Because the definition is any building and land appurtenant thereto. So, a factory building will also be considered as a house property. Meaning to say, the annual value of the factory building will also be included under this head, income from house property. Remember, it need not be a residential building. Any building and land appurtenant thereto. Think about it. What about a villa with a garden? Is this villa with a garden also to be treated as a house property? Of course, any building and land appurtenant thereto will be treated as house property. Let me take one more example. What about this agricultural land that Harish has? Agricultural land or vacant land. Agricultural land could be given for agricultural purposes. Vacant land could be given for, must be a parking lot. Yes. Now, what if rent is coming from these sources? Will it be treated as income from house property? The answer to that sadly is no. Why? Because what is house property? House property is any building and land appurtenant thereto. So if it's only land, if it's only vacant piece of land, if it's a vacant parcel of land, will it be included under this head? The answer is no. Only if it is having any building and land appurtenant thereto. So agricultural land, when it is given on lease, that income will not form part under this head. In fact, at a later point of time, we will learn what exactly is agricultural income. Will it include income from agricultural land and whether or not it is exempt? We'll study that later on, but right now remember, will it be included under this head? No. Income from a vacant property. So let us say there is a vacant parcel of land beside a cinema complex which has been leased out to the cinema complex. Remember, the owner is only the owner of the land. Yes, there could be a building beside which is owned by somebody else. Is there a building on this parcel of land? There is no building on this parcel of land. What he is the owner is only a vacant parcel of land, and if he leases it out, then there is no income from house property. Hey, does it mean that this income is not taxable at all? No, I did not say it's not taxed. I said it will not be included under this head of income, that is income from house property. But yes, it will be included into other heads of income like profits and gains from business or profession or income from other sources. Now you must be wondering, when will it be included into PGBP and when will it be included into IFOS? That depends on a very simple question. What is that question? Is the activity of leasing the business of the SSE? If it is the business, suppose leasing of vacant land is my business, correct? In that particular scenario, it will be included under PGBP, that is profits and gains from business or profession. Suppose leasing of land is not my business, then it will be included under income from other sources. Having said that, one thing we have understood is that house property is any building and land appurtenant thereto. An appurtenant word, have you understood? Appurtenant is nothing but nearby. Remember, appurtenant is nothing but nearby, attached to. Are you understanding? Having said that, two terms we've understood. We've understood that the annual value of the building and land appurtenant thereto shall be included in the hands of the owner. Now, through various other sections, we are going to understand in detail how to compute annual value and who is to be considered as owner. Now remember one thing. Owner not only means the legal owner. Owner not only means the legal owner. There are others also included. When I say others, who do I mean? I mean beneficial owners. And where is this list of beneficial owners given? This list of beneficial owners is given in section 27. Are you understanding? Like I told you, the charging section will direct us towards other sections. So, if you want to know the correct meaning of the term owner, we have to go to section 27. One more thing. In the charging section itself, it very clearly tells us that there will not be any computation. There will not be any computation if it is used by the SSE for own business or profession. What does it mean? Now, our friend Harish, he has a commercial complex. And let us say this commercial complex consists of 5 floors. Correct? Now, in this, the first 2 floors, that is the ground floor and the first floor, he uses it for his own profession. I told you, Mr. Harish is a chartered accountant. And the remaining floors, he has leased it out to somebody else. Are you understanding? We are bifurcating the so-called house property. What is house property? Any building or land appurtenant thereto. We are bifurcating the house property into 2 units. One unit consisting of 2 floors, which is being used for own business or profession. The other unit consisting of 3 floors, which is being leased out. Now, I want to know the annual value of any building and land appurtenant thereto will be included in the total income under the head income from house property. But for Harish, will you include the annual value of the entire 5 floors or only of the top 3 floors which has been leased? Remember, the charging section itself tells us if it is used for own business or profession, then there is no question of computation. computation. That means only the second unit, that is the top 3 floors, which is not used for business or profession, will be included for the purpose of computation. Remember, if a person is doing business or profession, then that 2 floors will not be included. There is no income. In fact, when we go to the next head of income, that is profits and gains from business or profession, I will teach you how the SSE can actually claim something called as depreciation under section 32. But till then, you remember only so much. What? Harish, if he has 5 floors, 2 floors which is self-occupied for the purpose of business. What am I using? What is the term I am using? Which is self-occupied for the purpose of business or profession. That part you will not compute the annual value. But any other part, let us say the top 3 floors, will you compute the annual value and include it? Yes. Now don't be mistaken with the fact that he is self-occupied it, that's why there is no income. No. If it is self-occupied for business or profession, then it will not be included. Let me take one more example for you. Harish also has a villa, a residential house, and here he has 2 floors. In the ground floor, what he has done, he has given it to, let's say, a kirana store or some showroom, something. He has given it on rent, and he stays in the first floor of the villa. Now I want to know how many units should we consider here? 2 units. 1 unit consisting of the ground floor, 1 unit consisting of the first floor. Now remember, is there any part or any unit of the house property which is self-occupied for the purpose of business or profession? No, it is self-occupied for residential purposes. And when it is residential purpose, then also there you have to find out what is the annual value. What is the only exception? If it was self-occupied for the purpose of business, then there is an exception, you don't have to find out the annual value. But if it is self-occupied for residential use or it is let out, you have to find out what is the annual value. And the annual value of any building and land appurtenant thereto shall be included into the total income of the SSE during the previous year. So we need to understand what is annual value. I have been using this term annual value. Remember, this term annual value is defined in section 23. Wow. So from section 22 we learned 3 terms. The annual value of the house property shall be included in the hands of the owner. For the term annual value, we have to go to section 23. For the term owner, we have to go to section 27. Very good. So, are you interested to know how to compute the annual value? But before that, are you also interested to know, first of all, apart from the legal owner, who else will attract the provision of section 22? Yes. So let's go to section 27. So like we were discussing, section 27 talks about the term owner. Now I was telling you, owner not only includes the legal owner but also includes beneficial owners, and the list of beneficial owners is what we are going to discuss in section 27. So let's read each of the clauses therein. We'll start with the first one. For the purposes of section 22 to 26, an individual who transfers otherwise than for adequate consideration any house property to his or her spouse, not being a transfer in connection with an agreement to live apart, or to a minor child not being a married daughter, shall be deemed to be the owner of the house property so transferred. So let's break it down. Let's understand each point. We have to understand with great effort. Chalo, let us assume there is a transferor. Remember, I am going to use 2 terms here, transferor and transferee. Acha, who is the transferor? Transferor is the person who has transferred the property. And who is the transferee? The person who has received the property. Okay, so transferor is on the giving end, transferee is on the receiving end. Chalo, so let us say there is a transferor, and this transferor, let's for the time being say Santosh. Now this transferor, what happens is he has a lot of properties, so he thought, hey, let me do an amazing thing. Let me transfer one of my properties to my wife. So Santosh transfers one of his properties to his wife. And he tells the wife, there is no necessity to pay me any consideration. The wife asks, is it out of love and affection that you are giving me? He says, no, it's not out of love and affection, it's out of tax planning. So see here what Santosh has done. Santosh has taken his, let's say, a residential flat, and he has transferred it by way of gift deed to his wife, and he tells the tenant, Mr. Tenant, from now on I am not the owner of the property, my wife is the owner of the property, so instead of paying me rent, you pay rent to my wife. Acha, now think about it. Santosh is the transferor, his wife is the transferee, and the transfer happened by way of gift. That means there is no consideration. And now the rent is being received in whose hands? Rent is being received in the hands of Mrs. Santosh. Now I want to know, don't you think in this particular scenario, Mrs. Santosh, by receiving the rent, is helping Mr. Santosh by getting taxed at a lower rate? Because I have not told you all the facts. Let me tell you all the facts. Santosh is already in the highest tax bracket. He has income over 10 lakhs. That means what is his tax bracket for any incremental income? His tax bracket is 30%. Whereas Mrs. Santosh right now has not even earned any other income, and therefore there is that basic exemption limit that is available. So had Santosh received the rent, it would have been taxed at 30%. Because Mrs. Santosh is receiving the rent, she can use the basic exemption limit. Wow, that means has this tax planning worked out? That means by doing a simple gift transaction and telling the tenant not to pay Mr. Santosh and to pay Mrs. Santosh, have they been able to save the tax? Not really. What does the law say? The law says, if there is any transferor who has transferred the house property to his or her wife, spouse, for no consideration or inadequate consideration, then for the purpose of section 22 to 26, the transferor will be treated as the owner. Wow. That means this whole transaction is a flop show. This whole transaction, there is no point of Santosh gifting the property to Mrs. Santosh because he cannot save the tax. He cannot divert the tax or the income into somebody else's hands. Are you understanding? The transferor will be treated as the deemed owner. So I'll use a new term. The transferor will be considered as the deemed owner. What is deemed? Mano ya na mano. Manna hi padega. The transferor is the deemed owner. Whether you like it or not, he is to be treated as the owner for the purpose of section 22 to 26. One more example. Let us say Santosh, instead of transferring it to his spouse, has transferred it to his minor child. Has transferred it to a minor child. Who is a minor child? Anyone under the age of 18 is considered as a minor child. Are we understanding it? So, now has he escaped tax? Has he escaped tax? Not really. Why? Because the law says whether you have transferred it to a spouse or you have transferred it to a minor child, the transferor will be treated as the deemed owner. However, there are exceptions in each of these two cases. See, if the asset has been transferred to the spouse voluntarily, then the provisions of section 27 come into play. Therefore, the transferor will be treated as the deemed owner. But what if, let me change the scenario. Let us say there is one Mr. A and there is one Mrs. A. Both of them were happily married until some unhappy incident happened. So, both of them decided, let's go in for a divorce. Let's go in for a separation. So, they went to court. Mrs. A went and claimed. She told the judge, "Sir, I have given him all of my life. I have spent all my time in taking care of him. I have sacrificed a lot. I did not go to office because we had a kid and had to take care of the kid. And that is why I could not work. I did not work. And therefore, I did not earn any money for myself." Whereas this man, Mr. A, is actually not sacrificed anything. He has gone out and worked. He has a huge social circle. But now, I want certain compensation. So, what the court orders? The court says, okay, Mr. A, please transfer the house to Mrs. A. So, listen carefully. Who has asked, or why is the house being transferred? The house is being transferred under an arrangement to live apart. The house is being transferred by Mr. A to Mrs. A, or now should I say ex-wife, under an agreement or an arrangement to live apart under a divorce agreement. So obviously now who becomes the legal owner? Legal owner is the ex-wife or whatever. Now the rent will be received by her. I want to know, now the rent is being received by her. You tell me, do you think the rent will be includable in the hands of A or ex-wife? Obviously in the hands of the ex-wife. How is it possible? Because the law says if the transferor has transferred a property to the spouse, then he will be deemed as the owner. But if it is under an agreement or arrangement to live apart, then the transferee only is the owner for the purpose of section 22 to 26. Are we understanding? So remember, if it's under a divorce agreement, then the so-called deemed ownership concept will not arise. Whoever is the legal owner, that person is treated as the owner for the purpose of section 22 to 26. And the second exception, I told you, if a transferor transfers the house property to a minor child, then the deeming provisions apply. But if the minor child is a minor married daughter, then the deeming provisions do not apply. Okay, are we clear with these two exceptions? First one, if it is transferred to the spouse under an agreement to live apart, deeming provisions do not apply. Second one, if it is transferred to a minor child being a minor married daughter, then the provisions of this section do not apply. Otherwise, if the asset is transferred to the spouse or to the minor child, then the transferor will be treated as the deemed owner. Are we crystal clear with the first point? Now let's go to the second one. The holder of any impartable estate shall be deemed to be the individual owner of all the properties comprised in the estate. You remember an old story that was told to us? United we stand, divided we fall. So let me repeat the story for those who have never heard it. So once upon a time, there was a guy who was lying on his deathbed, and he had 3 sons, and he called his 3 sons and told them, "Baba, get me a bunch of sticks. Get me a bunch of sticks." He said, "Tie them together." And then he told each of them, "Try to break it. Try to break the bunch of sticks. The first eldest guy tried, couldn't break it. The second brother tried, couldn't break it. The third brother tried, couldn't break it. And then he told, okay, let's do one thing. Open the bundle and then I'm going to give you one by one the sticks and then try to break it. So the father lying on the deathbed was giving one by one sticks to each of the three brothers. They were going on breaking it. So then he told them, see Baba, life is like this. If you three stick together, then nobody can break your relation. If you don't have any miscommunications, if you guys are together, whether in good or in bad, nobody from outside can do anything to you guys. But the day you people separate, people will break you. It's easy to break you like the sticks. Each of you is a stick. Anyways, that was the story and it had a moral. What is the moral? United we stand, divided we fall. But let me add a tax story to this. So this father, on his deathbed, he called his three sons and he told them, see beta, today I might be there, tomorrow I might not be there. I have a house and this house was built for all three of you. Now, as a father, I would like to give all three of you equal, but you know very well I cannot break down the property into three pieces because each of the pieces will become so small that none of you can live here. So I have an idea. I am going to create a trust. Now don't worry about how the trust is going to be created. Trust is nothing but a body. Okay. I am going to create a trust and I am going to transfer my property into the trust where you three will be the beneficiaries. Okay, the father told all three sons, three of you are beneficiaries. Three of you will be owning it equally. But for legal and statutory purposes, the trustee of the property will be the eldest brother. Are you understanding here? The trustee will be the eldest brother. So one of the brothers said, okay, either you create a trust or even simpler, why don't you put all three of us as joint owners? So the father said, okay, that's also a good idea. So I am going to transfer it to you as joint owners, but the holder of the impartible asset, the person who is going to be treated for all legal and compliance as the owner will be the eldest brother. Now, let us say the father passes away. These three guys are educated, they don't want to stay in the village. So what they have decided is they lease out the house. And they get, let's say, 30,000 rupees rent. And this rent is being collected by the eldest brother and then distributed to the three of them equally. Now my question is not whether he is doing it right or wrong. My question is, for the purpose of income tax, do you think the income tax department will now follow these three people and tell them, okay beta, how much you got rent? So you got so much, pay proportionate. Acha, how much you got? You got so much, pay proportionate. No, this is not the way they're going to do it. They are going to hold the eldest brother responsible for paying the taxes. Are you understanding the concept? They are going to hold the eldest brother responsible for paying the taxes. This eldest brother is called the holder of impartible asset, and he will be treated as the deemed owner for the purpose of section 22 to 26. Are we clear? I hope you remember every story. Now, why do I make these stories up? These stories are intended only so that you guys remember. Because if you are virtually seeing it and understanding it, then it becomes more fun. Then you understand scenarios. Anyways, we are done with two. What are the two? First one we said, the transferor transfers the asset to the spouse or the minor child either for no consideration or inadequate consideration. Second one, we said the holder of impartible estate. Let's go to the third. A member of a cooperative society, company or other association of persons to whom the building or part thereof is allotted or leased under a house building scheme of the society, company or association as the case may be, shall be deemed to be the owner of that building or part thereof. Let me take an example for you to understand. Now, in Bombay, this is quite prevalent. Let us understand what's happening here. Let us say there are a group of people. This group of people have decided, let's all of us together buy a piece of land, and then on this piece of land, let's all of us together construct a building, and each of us, let's take one of the flats. This is the concept. This is the concept. Why? Because see, it's very difficult for one person to go and build. But when a lot of people come together, it's easy. Same concept. United we stand, divided we fall. But here, united we have more strength. Yes or no? See, the whole idea of building flats together is awesome because land required is lesser than what would have been required had they been building individual houses. Having said all of this, so now there are two ways of doing this. They can have elections, and in the election they can decide who's the leader, and all of them give their money to the leader. Now some of you are thinking, what happens if the leader runs away? No worries, I'll tell you the second way of doing the transaction. Together, these guys can form an association of persons, a trust, a cooperative society. The concept in all three is the same. Together, they are creating a body, a legal entity where each of them is going to contribute. Each of them is going to contribute their share. Correct? And who is going to manage? The members of the society together are going to manage the fund. So understand here, all these people together have created a cooperative society. What do they get in return? They get membership. They get membership or they get share. Anyways, now this cooperative society, it acquires certain land by paying 1 crore. So they have paid 1 crore, they've got land. Wow, land is ready. This cooperative society, they collected more money. They spent 5 more crores on building. Wow, building is ready. And in this building, they have 40 apartments. So each of these 40 apartments have been allotted to these 40 people who contributed. Are you understanding the concept? Very simple. 40 people came together, created a cooperative society. Cooperative society bought the land, made the building, allotted the flats. Okay, till here we've understood. Now, who is the owner of these flats? Who is the owner of these flats? The owner of this flat, the legal owner, whose name is there on the sale deed, whose name is there on all the construction contracts. It is the cooperative societies whose name is there. So the legal owner is the cooperative society. Now think about it. Let us say one of the members, Mr. Radhesham. Mr. Radhesham is being allotted flat number 501. And what this Radhesham does, he gives out flat number 501 on rent. So who receives the rent? Who receives the rent? Radhesham will receive the rent. It is not the cooperative society. Cooperative society is the legal owner. Are you understanding? Radhesham is the allottee. Is the allottee. What does the law say? The law says Mr. Radhesham shall be treated as the deemed owner. Shall be treated as the deemed owner, and all the rent that is received shall be included in whose hands? In the owner's hands. Who is the owner? The allottee. And that's exactly what the law says. The law says in case there is a cooperative society where allotment has been done, it is the allottee who shall be treated as the deemed owner, not the society, not the AOP. Are we crystal clear? So all we have to see is what is the allotment, and whoever is the allottee, they are the owners. So till now we have done with 3. First one, transfer of asset by any person to their spouse or minor child. Second one, holder of impartable asset. Third one, LOT in a cooperative society. Let's go to point number 4. A person who is allowed to take or retain possession of any building or part thereof in part performance of a contract of a nature referred to in section 53A of the Transfer of Properties Act shall be deemed to be the owner of that building or part thereof. Let me take an example. So, let us say we have Hiranandani Builders on one side. You must have heard about these guys, big people, good apartments. So, this Hiranandani group has one building which is under construction, So, my friend Rahul, when he went to Bombay, he wanted to buy a house. I told him Hiranandani is good. So, Rahul goes and meets the manager at the site, the so-called sales manager, and he has the following chat. Rahul says, "Hey, is any flat available for sale?" Of course, flat is available for sale. Why don't you go look at it, see the building, see our quality of construction, see the floor plan, decide and then tell us. Rahul went, saw everything, and then he's decided he wants to buy on the 39th floor, the first flat, 3901. So he goes and tells the sales manager, "I would like to buy flat number 3901. Is it available?" He says, "Of course it's available. Price is 5 crores. But it will take us another 14 months to deliver. It will take us another 14 months to deliver." Okay. He says, "No problem. So what are the terms of payment?" Says, "Okay, you pay us 10% now. You pay us in 6 months another 10%. By the 12th month another 10%. And then after we hand over, you pay us the remaining." Okay. So days pass, payments have started. Okay. And in the 14th month, remember, on a timeline, on day 0 what happened? Day 0 they got into a contract. What is this contract? An agreement for sale. The contract was an agreement for sale, not an agreement of sale. Agreement for sale means what? In the future, I will definitely sell to you and you pay me this price. This happened on day number 0. Then after certain days, after 14 months, what happened? The property was delivered to my friend Rahul. But Rahul was out of station. Hiranandani sales manager, marketing manager, director, they were not well. What not happened? Then he went for his holidays, they went for their holidays, things how they can postpone. Anyways, so delivery happened, but registration did not happen. What was postponed? Registration was postponed. That means sale deed was not executed. After 6 months or 9 months, they decided, let's go ahead and do the sale deed. Okay. Now, the story is from this date, that is from the date of delivery to the sale deed date. Now, what our friend Rahul did, he did not want to keep the flat idle. So, as soon as he got delivery, he leased it out to somebody else. And every month he was getting 1 lakh rupees rent. And that 1 lakh he was using for other purposes. So, my question, on one particular date, the date of delivery, he got the house, he started giving it on rent and he started getting 1 lakh for all those 6 months or 9 months. After 9 months, he became the registered owner. And then also it was continuously getting him 1 lakh. Now, my question here is very simple. When does our friend Rahul become the owner? For this, let me take you to one section 53A of the Transfer of Properties Act. I call it TOPA, Transfer of Properties Act. And this section is very important, ma. Section not only comes in this head of income, also important for capital gains. But remember, what does this section say? Understand the section. The essence of the section is very important. Section says, if three conditions are satisfied, then the transferee becomes the deemed owner. What are these three conditions? There must be an agreement. Consideration should have been determined. Possession should have been transferred. Acha, three conditions are given. Three conditions are what? There must be an agreement. Consideration should have been determined and possession should have been transferred. Let's check these three conditions on the first date. That is the date on which there was an agreement for sale. On this date, was there an agreement? Yes. Was consideration determined? Remember, I did not say paid. Was it determined? Of course, it was determined. Yes. Was possession transferred? No. I told you. What did the builder tell on day number 0? Builder said, Bhaiya, after 14 months, I will give you delivery. So, on this particular day, three conditions was not satisfied, and even today, even on that particular day, who was to be treated as the owner for the purpose of Transfer of Properties Act? It is the builder. Coming to 14 months later, when the delivery was given by the builder to the so-called Rahul. Here, let's check for the three conditions. What is first condition? There must be an agreement. Correct. Second condition, consideration is determined. Arey bhaiya, these two conditions are satisfied then also. Third condition, possession is transferred. Yes, on this particular day, the possession was transferred by the builder to Rahul. And because the three conditions were satisfied, as per section 53A of the Transfer of Properties Act, Rahul becomes the deemed owner. And what does section 27 say? Rahul becomes the deemed owner for the purpose of section 22 to 26. Now you tell me, when Rahul leased it out and he is getting every month 1 lakh for the 9 months, till the date he actually becomes the legal owner, this 1 lakh, is it going to be taxed in the hands of the builder who is the legal owner? Or is it going to be taxed in the hands of Rahul, who is the deemed owner? Section 27 says it is going to be taxed in the hands of the deemed owner, who as per section 53A of Transfer of Properties Act is Mr. Rahul. Are we clear with this? So, we understood the concept of deemed owner under section 53A of Transfer of Properties Act. Remember those three conditions. Number 1, there must be an agreement. Number 2, consideration should have been determined. And number 3, possession should have been transferred. So, are you clear? So, we are done with 4 scenarios. First one, transfer by a person to the spouse or minor child. Second one, holder of impartable asset. Third one, allottee of a cooperative society or association of persons. Fourth one, section 53A of Transfer of Properties Act. Now let's go to the fifth one. A person who acquires any rights, excluding any rights by way of lease from month to month or for a period not exceeding 1 year, in or with respect to any building or part thereof, by virtue of any such transaction, as is referred to in clause F of section 269 UA, shall be deemed to be the owner of that building or part thereof. Kya baat hai? Section says, if a person becomes an owner as per section 269 UA clause F, then he shall be treated as owner for the purpose of section 22 to 26. Let me take an example for this. My uncle, he wanted to set up practice, and initially when he wanted to set up his practice, he was looking for places and he found one beautiful 3000 square feet commercial complex which was owned by one of his friend's friend. Okay. So, We Indians, we are very emotional, sentimental. We believe in a lot of things. We believe that everyone does good and is good. That is true. But there are a few people who are not. So let's see what happened to my uncle. So my uncle, he saw a nice property which was owned by his friend's friend. He went to him, spoke. They decided that the rent in those days, I'm talking about 1980s. In those days, the rent there was 5 rupees for 3000 square feet. Can you believe it? Those days rent was 5 rupees for the entire one, not for each square feet. So they decided, and then it was unfurnished. So he had an oral agreement. He had an oral agreement with the owner. The owner said, hey, go ahead man, we'll do the formal things later on, start your work, get the furnishings done and you can start off your practice and there are no issues with me. I know you, you are my friend's friend. So my uncle said, hey, very nice. So who wants a contract? Who wants rental agreement? Let's go ahead. So my uncle invested a lot of money. Those days a lot of money. He got the furnishing done. He got the cupboards set up, the cabins done, and now it looks like a professional office. Only one thing missing, there is no rental agreement. So one fine day the owner walked in and he says, hey, office is so good. Actually, you vacate. I'll give it to my son. Wow, my uncle is shocked. What are you saying? I spent so much time and effort and money to get the office renovated and how can you do this to me? He said, see, if I have to get an office like this, I have to spend 10 rupees outside. So you vacate, I'll give it to my son. So my uncle said, okay, listen to me. You want 10 rupees? I'll give you 10 rupees. Although originally we spoke only for 5 rupees. Now because you're insisting, it's actually my mistake. So I'll give it to you. I'll give you the 10 rupees. But this time I won't do the mistake. This time let's get into a formal contract. And you know, when people do something wrong, although they don't express it, they have a guilty feeling somewhere inside. Correct or not? Think about it. When you actually crossed a signal and you know you did something wrong, from the outside you might be arguing with somebody else that it's right, there was nobody at the signal is late, but inside somewhere you know you've done something wrong and you should not repeat it. Yes or no? That's self-conscience. And I think the more literate you are, the more self-conscience you gain. Having said that, so this man, the owner, he also was a literate man, had a lot of self-conscience, and he thought to himself, I'm behaving like this. At least, this time let me sign a formal contract. But this time my uncle, he did one thing. He told him, see, I know if I sign a contract for 1 year, you will ask me to revise the rent after 1 year. You do one thing, you sign a contract for the next 30 years. For the next 30 years, you sign a contract. What? A rental contract. And in this 30 years, I will pay you, every month I will pay you your 10 rupees. And must be every 5 years, we will have an increment of 20%, whatever. So that's fair. So he also thought, hey, every 5 years I am having increment of 20%. What else do I want? Signed the contract because his self-conscious was telling him, you already cheated this guy, do something good for him. So his self-conscience said, just sign it. Just sign it. And you know what they say? People who are once bitten, twice shy. You take panga with anybody on the planet, not with a chartered accountant. See what my uncle did. So, days passed, 1980s, India was a little different. Days passed by, months passed by, years passed by. And somewhere in the early 2000s, this owner who actually signed the contract suddenly realized that India has grown so rapidly that the rent that he originally signed, that is 10 rupees plus inflation of 20% every 5th year, is actually getting him, let's say, 50 rupees. But the market price is now 1000. The market price is now Acha, when did he realize this? He realized this after 20 years over. He realized this after 20 years over. In 1980, he signed the contract. In early 2000, he realized, Arey Baba, I should not have signed the contract. So, this is what happened. This owner, he went back to my uncle and told him, hey, I want you to vacate. The reason being, everybody around me is paying for a similar premises 1,000, 2,000, 3,000, 5,000 and you are still paying me 50 rupees. Take panga with anybody, not with a chartered accountant. So my uncle told him, you signed the contract. The contract said it is 10 rupees plus inflation plus increment of 20% every 5 years. So I am following it. Then this guy said, okay, then the contract also says that I can give you a notice for you to vacate. Now understand one thing. Section 269 UAF says, if the tenant, here my uncle, if the tenant has a right of occupancy of a period greater than 12 years. Does my uncle have a right of occupancy of greater than 12 years? He has already stayed for 20 years. Are you understanding? He's already stayed for 20 years. And the lease agreement says he has another 10 years to go. Section 269 UAF says, if the tenant has a right of occupancy of a period more than 12 years, the tenant becomes the deemed owner. The tenant becomes the deemed owner. This in formal or informal language we call as kabza. So, now my uncle, tell me, can he be asked to leave the premises? No. See, actually this whole tenancy rights, all these were implemented because of the old system, the zamindari system, the raitwari system, where they used to exploit the tenants. So the tenancy rights actually secure the rights of the tenant. So you just cannot ask the tenant to leave. After he's established a practice of over 20 years, how can you simply say leave everything now and go? He becomes the deemed owner, especially if he had a right of occupancy of a period greater than 12 years. Have you understand? So now my uncle very nicely told him, Beta, 20 years back, you might have forgotten, but I remember, he told the owner, when I told you orally that I'll pay you 5 rupees, what did you come and do? You said, make it 10 or I'll give it to my son, vacate. That day itself I decided, with people like you, we have to do something like this. So I made you sign 30-year contract. I knew the law, you didn't know the law. The law was there. Anyways, so now I am the deemed owner. No worries, I will not claim your property. But you have no right to send me out. I will continue to pay you rent at 50 rupees plus increment of 20%. And during this period, neither you nor the police nor the Constitution of India can ask me to leave this premises. Do you think what my uncle did was right? I think it is. Having said that, the owner initially never kept his word on that 5 rupees deal. Having said that, now what has happened? Now after 20 years, my uncle decided, this is not the right place to practice. See, when he set up practice, the place that we are talking about, this 3,000 square feet, was actually more than sufficient for his office. But in today's world, 3,000 square feet is too small, especially because the practice has grown. Lot of family members have joined. Today there are 20 partners. Today they have so many clients. So they thought, let's go to a bigger premises. So they took up a 45,000 square feet building and they shifted the whole practice. And what did they do with this 3,000 square feet? They leased it out to one more person for 5,000 rupees per month. Now think about it and tell me, my uncle, is he the owner Legally? No, he is not the owner legally. Legally, he is only a tenant. And then he has subleased it at 5,000 rupees per month. I want to know this 5,000 rupees, will it be included into my uncle's hands under the head income from house property? The answer to that is yes. Why? The answer to that is yes. Why? Because my uncle will be treated as the deemed owner as per section 269 UAF. 269 UAF. He will be treated as the deemed owner and that 5,000 rupees will be included. See, normally, if a tenant is subleasing it out to somebody else, I told you it will not come under income from house property, it will come under income from other sources or PGBP. But in this particular scenario, because he had a right of tenancy of a period greater than 12 years, that is why my uncle will be treated as the deemed owner and that 5,000 rupees per month will be taken into consideration for the purpose of computing income under the head house property. Having said that, one more important point here. So, are you telling me, sir, that any contract which is for a period of 12 years or more will put the owner into problems? No, that's not what I said. That's not what I said. The law also says, if there is a right of renewal for a period of less than 1 year, in the brackets if you see the law, if there is a right of renewal for a period of less than 1 year, then the section 269 UA does not apply. Are you understand? If you notice, almost every lease deed that you would have seen till date, unless and until it is a lease deed that is for long term, normally lease deed is only for 11 months. Have you ever wondered why it's for 11 months? You think 11 is a fancy figure? No, people do 11 months but they don't know why it's 11 months. Today I am telling you. It's 11 months because it has to be for a period less than 12 months. It's 11 months because it has to be for a period less than 12 months. Why should it be for a period less than 12 months? So that the section 216 UAF does not apply. And remember, it can be renewed for how many more years? For example, you could be having the same tenant for the last 30 years, but every 11 months keep a renewal. Are you understanding? That is why most lease deeds are for a period of 11 months. Anyways, are we clear with this section? Are we clear with my uncle's example? Why my uncle was treated as the deemed owner and why the sublease amount also was included in his hands under the head income from house property. Chalo. So now we are done with 5 scenarios. I hope you understood each one of them. So we have understood completely this term owner. We also understood owner not only includes legal owner, includes deemed owner under section 27. And now we are going to understand how to compute annual value as per section 23. Let's go there.